Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are going over the latest stock market news updates so you can determine if right now is a good investment opportunity regarding your stocks. We're going to be talking about the general stock market, the overall macroeconomic economy, the latest news updates, and individual stocks. I used to do a lot of videos like this back in the day, so I thought that I would bring it back. If you like videos like this so you can stay informed on the best stocks to buy and what's happening in the macroeconomic economy, which will affect the overall stock market, go ahead and annihilate that like button right now. Subscribe if you are new. Comment your thoughts down below about any or all of these stories, and without further ado, let's get right into it. Let's start off talking about the stock market, and as you can see, we see many stock market benchmarks such as the S&P 500, the Nasdaq Composite, the Dow Jones, bonds, Bitcoin, and AMC are not doing very good right now. Specifically, technology stocks have dragged down the market both today and yesterday, even with the Magnificent Seven stocks suffering on their fourth trading day. And if you didn't know, the Magnificent Seven are comprised of super strong blue chip companies such as Apple, Microsoft, Alphabet, Nvidia, Amazon.com, Meta Platforms, and Tesla. So it's interesting to see how all of these companies have suffered recently over the last 4 trading days, but I think these are all phenomenal companies to hold in your personal portfolio. What's also interesting is the reason behind why the shares are falling of these mega cap companies as well as the general stock market, and that's because the Federal Reserve recently released meeting notes that showed their timeline regarding interest rate cuts in 2024, and they said that it looked rather murky. On top of that, we also saw that AMC fell to an all-time low, which means that it has failed to keep up with the meme stock magic that has been surrounding that company ever since a few years ago. Now, for the macroeconomic economy, we see that job openings have been harder to find, to where in November, job openings fell to their lowest level since March of 2021, even though they are 8.79 million more job openings than before the pandemic. And according to the recent statistics that were launched by the Department of Labor, we also saw a decrease in people quitting their jobs, changing jobs, or being laid off. And with this hiring cooldown, this would be the latest sign that the Federal Reserve's rate hikes have actually officially started to curb inflation, which is a good thing for the overall economy. Something else to look forward to would be Elon Musk's SpaceX company, where SpaceX launched 6 Starlink satellites that are designed to provide LTE mobile phones with network signals even in areas that don't normally have very good cell phone service. And Elon Musk is doing this directly to help T-Mobile customers. The satellites that SpaceX actually launched into space are the direct-to-cell satellites, to where the company describes them as a cell phone tower in space. And essentially, it's just meant to broaden the overall connectivity and networking capacity of T-Mobile. I'm sure we could all relate in various areas of the world, specifically in remote areas, to where it's currently impossible to get any single bar of data or service when you're trying to make a phone call or at least get a connection. This is why SpaceX is providing satellite coverage by partnering with T-Mobile in the United States. The direct-to-cell satellites will only enable texting right now, but as time goes on, they will also have voice data capabilities. This venture could actually give SpaceX $10 billion of sales per year, which is absolutely amazing. But other companies are trying to compete with this, specifically in regards to extraterrestrial cell service. For instance, AT&T completed their first voice call on a regular phone using a satellite connection, and they did this last year. We also see Amazon beginning to beta test their own satellite service, and they are doing this in support for Verizon, NTT, as well as Vodafone. So it seems like this carrier race is just really getting started, and it seems that the sky is the limit for the majority of these companies. We also see Xerox planning to lay off up to 15% of their employees as a part of a broad reorganization structure, and we also saw Starbucks, which is now letting their customers use their own cups in drive-thru. However, I think that there are going to be a couple problems with this overall idea, but the general idea is that Starbucks wants to cut back on their overall waste, so they are encouraging customers to bring their own cups. But I personally think that this is going to cause a lot of gripes among customers, because cups are different sizes, there could be more chances of spilling hot coffee, and overall I think there are a few problems with this overall thought process, but we're just going to have to wait and see. We also see that Tesla's electric vehicle deliveries could soar past 2 million units this year for the year of 2024. And if you didn't know, Tesla is an electric vehicle manufacturer as well as an energy storage company. But overall, I like to value Tesla as a technology company. And according to an announcement that was on January 2nd, they hit a target of producing 1.8 million vehicles in 2023 for that entire year. That was their target. However, they actually surpassed this target by building out around 1.846 million vehicles, which is phenomenal. As of quarter 4, Tesla's quarterly delivery numbers beat analysts' forecasts by around 7,500 electric vehicle units. But when we look ahead, we can see Tesla produce around 2.2 million or more vehicles in the year of 2024, which is phenomenal news for Tesla stock investors. Speaking about electric vehicles, we also see the Chinese EV maker named BYD outselling Tesla, which is quite interesting. But before we get into that, I want to make a quick note about Bitcoin, which recently topped over $45,000, and then recently they've pulled back slightly. But I think that is phenomenal news for cryptocurrency holders, and it makes me look forward to potentially a Bitcoin ETF, which I personally will be buying into whenever that comes out, or whoever comes out with it. But now let's return to talking about Tesla. Tesla actually set a record of EV sales in the first 3 months of last year, after shipping out nearly 485,000 electric vehicles. However, this is still not enough to compete in the number 1 spot, which is held by the Chinese EV maker BYD, which sold 526,000 vehicles, which dwarfs Tesla's 485,000 electric vehicles. However, for me, I think Tesla, BYD, and most likely NIO or Li are the best electric vehicle makers in the world right now. Tesla has been a top player in the EV space for quite a while now, and they still out-earn BYD because of their high prices. And that's why Tesla has some of the best margins in the entire industry. We also saw yesterday that the electric cars that qualify for the full $7,500 tax credit in the United States shrank to just 13 models. And if you didn't know, if you buy an electric vehicle, you will actually get $7,500 worth of tax credits, which is fantastic. Now, Tesla's Model Y still meets this standard. However, the Cybertruck and some versions and variations of their Model 3, Model S, and Model X no longer meet this standard to get that $7,500 in terms of a tax credit. So this makes their overall cars more expensive, which doesn't do Tesla a lot of good overall, but in the end, I absolutely love Tesla. Two other things that you can chew on is that many people seem to be canceling their subscriptions for streaming services like Netflix and Max, with approximately 6.3% defecting in November. However, to keep customers, various companies are building services that offer a cheaper tier with ads, meaning that you can pay for these services on a monthly basis, but it's going to be relatively cheaper than their other subscriptions because that subscription is going to come with ads. Now, you should also be aware that there is $2.2 billion worth of medicine that is about to expire next month. And this would be Pfizer's Paxlovid meds, which was used to treat COVID. The demand for COVID vaccines and other medications in regards to COVID have dramatically decreased over the long term. However, both here and abroad in the United States, we see that a lot of vaccines for COVID are actually set to expire, meaning that there is going to be a lot of money completely going to waste. And my personal take on that is these large pharmaceutical companies can absolutely just eat it, because I really don't care. These companies already made extreme amounts of money during that overall time, and I think it's terrible that they actually monetized an overall pandemic, but overall that is another whole video. Let's focus on a company called 23andMe, which you probably are familiar with. If you didn't know, you can order 23andMe's product and they will be able to show you your history, where you're related, where you're from, and do a lot of DNA testing, which is pretty cool. However, 23andMe recently reported that they have been breached. Yes, they have been hacked to where the hackers sold DNA data and ancestry data of nearly 7 million people. Now, what I find interesting is that 23andMe is actually blaming its users for not having good passwords. But overall, clearly, I think this is 23andMe's fault. You should also know that Roku, who is a Streambox maker, says that they will debut their high-end TV this spring, which will cost $1,500. And we also saw General Motors having its best year in the United States for car sales since 2019. This has actually led to more positive developments over at General Motors because they were recently upgraded to an Outperform rating. General Motors, ticker symbol GM, was recently given an upgrade to Outperform from their original Peer Perform rating, and this is pretty cool. If you didn't know, ticker symbol GM, this is a automotive and manufacturing company that is currently priced at $35.92. But thanks to a more moderate interest rate environment, we anticipate an increase in overall car sales that GM is going to take advantage of, to where now they have a price target of $42, which is 19% above the recent closing price. So overall, that is good news for General Motors. We also saw Rivian, which is an electric vehicle manufacturer, was recently downgraded because of demand issues. And if you didn't know, Rivian has done some business with Amazon to make their electric vehicles for their delivery or last mile delivery vehicles, and Rivian also has a pretty cool Rivian truck. This is an electric vehicle maker, and some people really like them, but their share price is even going to go lower because of this overall downgrade. The reason for this downgrade is that the demand for these vehicles are just not there right now, but we will see how this company performs in the future. Next, let's talk about Snowflake, because they also got a recent downgrade. Snowflake, if you didn't know, is an artificial intelligence company and a big data analytics company. And recently, Snowflake, ticker symbol SNOW, ticker name Snow, which is priced at approximately $185 right now, seems to be overvalued according to analysts. They think that this data warehouse company is just too overvalued right now, and here's what they say about it. They think that this company is hyped up on artificial intelligence excitement, which has caused the overall share price to become overvalued, and now it's vulnerable to selling pressure, to where they lowered their overall rating on this company from a neutral rating down to a sell rating, and now they have a price target of $160 for this company. Now, over the long term, I personally still think that Snowflake is well positioned, but their margins are rather thin right now, and I would wait for this company's share price to drop a little lower before making a large investment in this company. But that's not all, because we got another downgrade from a prominent stock, which would be PayPal, to where Oppenheimer downgraded PayPal based off of profitability concerns. PayPal currently trades for around $58.64 currently, and they are a mobile payments company. Analysts over at Oppenheimer used to put an Outperform rating on this overall company, and now they just have a market perform rating, meaning that PayPal is going to do, or at least perform close to what the general stock market is going to give investors. However, for me, I would disagree. I think PayPal is an absolutely phenomenal company, and it has been on a plethora of videos that I've made about the top 10 best stocks to buy right now in 2024. Rounding out the video now, let's quickly talk about AbbVie, MongoDB, and APA, as well as Walgreens. AbbVie, which is a dividend behemoth, their shares recently fell, ticker symbol ABBV, because CVS decided to exclude the pharmaceutical company's anti-inflammatory drug. And if you didn't know, AbbVie is a pharmaceutical company, and with CVS nixing this overall anti-inflammatory pharmaceutical, this is going to negatively impact AbbVie. And if you didn't know, AbbVie currently trades for $161 right now, but in my opinion, they are a phenomenal dividend company and just a great company overall, and that's why I hold them in my personal portfolio. Next, we have MongoDB, whose shares have recently slid because of a recent announcement from a UBS analyst who downgraded the stock from a buy rating down to a neutral rating. MongoDB currently trades for $366.88. However, this analyst decreased their price target from $475 down to just $410. But as you can see, this company still has good upside left in it. Now let's talk about APA Corp. APA fell over 5% recently, even though they recently agreed to acquire Hallam Petroleum, ticker symbol CPE, in an all-stock deal valued at approximately $4.5 billion. What's odd is that normally acquisitions tend to increase the overall share price of a company, but this time it ended up going down, and I think that's because the company has already ran up due to pre-anticipatory excitement, and now the stock is cooling off, which is just a part of a regular stock cycle. Lastly, let's talk about Walgreens Boots Alliance, another fantastic dividend stock to own in your portfolio. portfolio, who recently released better than expected Q1 results. So overall, that is good news for Walgreens, which currently trades for $23.05. That caps out the video of today's news stories. If you want more videos like this one, so you can stay informed on the stock market, the general economy, and the latest news updates on your favorite stocks, don't forget to go and annihilate that like button right now. Subscribe if you are new. Go ahead and become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.